Just got some word here. The official hint here is the Fed is on the verge, guess what, of more easing.
Well, that ought to reverse the market tomorrow and make gold and silver go right back up again. I think they took it down to stop the commodities and gold and silver. They took them down to stop the volition on the upside. And, you know, a correction was in hand anyway. It had a pretty good run to both of them, as well as the commodities. So it might last a couple more days, and that ought to be it. They'll try to close the stock market somewhere between 10 to 11,200 and 11,700 to make it look good for the election. And after that's over, government will be in there trying to pass all kinds of terrible legislation and not caring anymore, just the last gasp of what they can get away with. And so that's what I think we're facing here. Although I think in November the stock market probably will go down, not precipitously, but I think it'll have a correction perhaps back to 9,600 or 10,000, while gold and silver and commodities proceed along their merry way. But I do think this correction that we've just seen in precious metals offers a great opportunity for buying.
It's off 38.10. It's at 1332.50 today, and you're exactly right. Time to buy.
Real Talk Radio. You're listening to the National Intel Report with your host, John Stachmiller.
You know, Bob, evidently things are not all right with the all 12 of the bank presidents of the Federal Reserve. While Dennis Lockhart's willingness to cite specific dollar figures for purchases, and he's the Fed president out of Atlanta, he said on CNBC, if we're going to pursue another round of quantitative easing, it has to be a large enough number to make a difference. Well, there's a little problem here in their own camp because the Federal Reserve guy out of, I think it's Dallas here, Richard Fisher, I do believe it is, yeah. He said, while the economy is barely growing fast enough to create new jobs, the case for further monetary easing has not been made conclusively. So they even have problems wrangling up their own people in their own Fed Reserve and these federal bank chairmen to come together and conclusively say that, yeah, we got to do a QE2.
Well, that is not unusual, and it could be by design. We know that $2.5 trillion, which included $868 billion, or a total to $2.5 trillion in stimulus QE1 combined. I don't know how much money the administration is going to get from Congress, but my guess is maybe 200 or 300 billion. We'll say 300. So the Fed's got to come up with 2.2 trillion to match what they did the last time. The problem is that amount of money did not extend recovery. And now we got another dip and we got to do it again. And so that amount of money, reflecting on the first statement by Lockhart, is not enough, and we know that already. And what are they going to have to spend? $3 trillion? Maybe, probably. What's that going to do? It's going to cause inflation, and that means too much money chasing too few goods syndrome. Mm-hmm. It's not going to help the employment situation very much at all. It could be slightly beneficial, but that's it. And that's just to run parallel, sideways. And so they're at a point here where the Fed representative from the Dallas Fed is telling us, well, I don't know whether we ought to do that. Well, if we don't do that, the whole thing's going down the tubes. And, the dollar was up 1.28 today. If I remember correctly, that's right, at 78.21. Now, the market in the dollar was oversold. It had gotten down to 76.54, so it's up almost 2 points. In my last issue, which is tomorrow, I said look for 80. I think that's a reasonable rally. I really don't think it can rally much more than that. The correction in gold and silver and commodities is not going to last very long. At the outside until next Tuesday, which is only 4 business days. And the reason I say Tuesday is that the option expiration day for both gold and silver is on Tuesday. And so I'm sure the Fed has this in mind because most of those positions belong to the U.S. Treasury. And they're the ones who are on the short side of the market. And so they would like gold down so that they won't get banged for so much money. The J.P. Morgan Chase is offside on their silver contracts because of the net short position, naked, about $1 billion. And they would like that to get better. And, of course, it got a bit better today with silver having fallen $1.06 to 23.37 in the December month. Gold was a little bit lower in the December month as well, off 38.40 as opposed to 36.10, a $2.30 difference. So that means the market will probably be soft again in the morning in the commodities as well as gold and silver. And by the looks of the futures contracts, the Dow, which was off 165 today at 10,979, will probably be a little softer tomorrow and the next day as well. But the good part of the correction's over. And when that happens in 1 or 2 days like this, for commodities and gold and silver, it's very good. I mean, you wouldn't want, say, gold, which is now down about $50 from its highs. You wouldn't want that to happen over 20 days. Having it in 1 day is really good. Going to go lower? Yes, a little lower. But that's about it.
Well, and if you think about this, how many people out there are kicking themselves right now when their dollar has continued to be erased? I don't know how much more of the dollar value we can erase without it being worth absolutely nothing. People looking back and going, geez, God, I should have bought gold when it was $200 an ounce. Yeah, you would have enjoyed almost an 8-fold increase in it. Remember when silver was putzing around $2.25 an ounce? That's now sitting, even though this recent correction, it's down $1.01 here, you're still looking at $23.39. And we know what's going to happen with these quote-unquote commodities. They're going to go through the roof. I mean, there's, and people, Bob, people still don't trust us when we say that. They're still out there chewing their fingernails going, geez, should I cash in my IRA? Should I go after gold? Should I get out of the stock market right now? Should I cash in my stocks and buy gold? Gee, it's awfully high. Maybe I'll wait till it comes down. Well, it just did. It just came down $36 an ounce. That's a gift. That is nothing but a pure gift, and it is going to continue to climb. A lot of people don't believe us, Bob. They
well,
honestly.
It's okay. Let them lose their money.
Well, it's.
Yeah. What are we supposed to do? Bang them over the head?
Well, I don't know. Maybe try a different approach. Maybe just start calling them stupid. I don't know.
Well, I did that last week in another program, and I started to get letters from people who hadn't bought that didn't like me calling them stupid. But I wrote back to them and told them. The proof of the pudding is in the tasting, and the tasting was at $13.80 at the time, and so they got a reprieve. They got a chance to buy cheaper, maybe even cheaper tomorrow. Who knows?
It may be.
But the point is, this thing's going a lot higher.
I doubt it, though. I really doubt it.
This sterilized money that's in the banks, plus the money that's going to be given to them, will be about $3 trillion. The corporations got $3 trillion, and that's why the market can't go down too much. It could go back to 96.80 or 10,000, bounce back again. The companies are in there buying their own stock so that their options that the offices have in the company will go higher so that they can make money. And that's why they're doing what they're doing. I don't think it's a good idea, but they've done it for a long time.
You know, the banksters, the member Guido, and please no emails that I'm insulting Italians, because I'm Italian myself, so don't bother sending me emails. The Fed has said that the economy has grown 1.9% in the third quarter. Where, Bob? Where did it grow?
Well, the figure for the second quarter was 1.4. They don't have those July, August, September figures yet, and we should be getting them shortly. And in reference to Guido, Lucky Luciano, before they shipped him off to Italy to spy for the American government using the mafia against the Germans, said, as a gangster, he confessed, I suddenly realized I'd joined the wrong mob after I'd been on Wall Street. And boy, if that isn't one of the true statements of all time.
Well,
he was given a pardon for his work for the American government with the mafia in Italy in defeating the Germans, and it was really critical. I mean, he saved many, many, many American and Italian lives as well. And but he did say, "I joined the wrong mob."
Well, you know,
and I saw that statement when I was 8 years old in the newspaper in 1943, and it always stuck in my mind. And so I went to Wall Street.
Just to see what it was all about. Yeah.
Oh, of course.
Yeah. Well, here's the case of the Fed with their quantitative easing. That's what's driving the dollar down. And then the dollar just resurged. That's why I'm looking for gold and silver to be on the upside tomorrow. The markets and the quote-unquote commodities reacted to the Chinese central bank raising interest rates.
Which has nothing to do with anything.
Well, according to Wall Street,
I mean,
it does.
You got to be kidding me. The Chinese had to raise rates because all the money that they pumped into the economy over the last 2 years, which was close to $3 trillion, is gone into real estate and the stock market, which is exactly where they did not want it to go. And members of the Communist Party, who have a leg up on everybody else, they took that money and gambled with it, essentially, and it created very few jobs.
Well,
and that was the intention of the government.
I caught one of the talking heads on one of the financial shows talking about China, and they said, oh, this is good. That means they'll be buying more of our debt. That's a good thing. We'll take your calls right after this.
Hi, I'm here talking with Don Wiskin of HeartDrop.com. I understand that you changed the name of your product, Don.
Yes, we did. It's now Extendivite, meaning to extend your life.
Wow, extend your life. Everybody wants to extend their